I'm very excited about this next speaker that's about to come up. You know, every hero's journey has a redemption story, and I love that. You know, Superman is not a hero because he can fly. He's a hero because he gets challenged and he gets back up. He gets hit with kryptonite, he finds a way around it, and he gets back up and he survives, and that's what makes him a superhero. And our next speaker who's coming up, he started at a very young age. At the age of 20, he bought his first unit. He flipped that for 2 units. He flipped it and flipped it and flipped it. And by the time he was 40, he had done over $9 billion in transactions, which is an incredible thing. He didn't have family money. He didn't go to Harvard. In fact, he didn't go to college. So I find stories like that incredibly encouraging. And then in 2023, 2022, we'll ask him, he sold his management company for a lot of money and walked away with nearly $100 million in his pocket. And you would think that would be the end of the story, right? Like if you had $100 million, you go and you sort of sit back and relax. But that's when, you know, you hear these stories about how people win the lottery and then their lives implode. That's what happened to our speaker. He, you know, after he sold his management company, he made his fortune. His life sort of took a left turn. And it was very public, and it was very scandalous, and it was very controversial. And for the last 2 years, I've been trying to get him to come give us an interview, but he wasn't really ready until now. So I'm really happy to have Patrick Carroll, our next speaker, come onto the stage. So please put your hands together for Patrick Carroll. Should we stand, or should we do a standing or sitting down? I didn't realize he was this tall. You know, like in his Instagram post, I thought he was like 5'5".
I gotta fix that.
Yeah. Patrick, I guess my first question is, we should address all the controversy that you had to deal with, you know, in the last couple of years. So, what the fuck?
Well, you know, it's funny you should ask. You know, I get asked that question a lot, and it's something that I'm proud to talk about. But at the time, I was suffering from what I now know is undiagnosed.
I'm going to ask you to hold the mic like that so they could hear you. Yeah.
Okay. Yeah. From the time I was dealing with undiagnosed bipolar disorder, which is it can cause periods of mania. And as I look back, it really probably helped during my business career because, you know, you have bouts of creativity. You don't sleep for days. You can probably drive harder than most. But really, you know, I'd say COVID had a big effect on my stress level.
COVID had that effect on a lot of people. But do you think the fact that you sold a big chunk of your company, and I mean, you still own a big chunk of your company.
Still own a big chunk.
But after you sold it, you sort of sat back. You sort of spiraled, you know, out of control.
Yeah, I don't mind, you know, being in retirement, having nothing to do, sitting in my pool in Miami was not good for me, to say the least. But you know, what I was talking about COVID is the way this bipolar works is life changes, big stressors can kind of flip the switch. You know, you go from, you know, running 150 miles an hour to kind of going into overdrive. You know, my doctor tells me it's like my brain's a Ferrari. You can only run it at full go for so long until you know. So dealing with the controversies, you know, it was pretty public. I wish I'd never heard of Instagram and you know, put all that out, but you know, in a way I'm good. So yeah, I mean, I starting in March of 24 went into a full-blown manic attack. And frankly, I don't, you know, there's a lot of it I don't even remember. I mean, I look back on it and I see things that I posted or I read articles and I cringe. But it really was something where when you're going through this, you think you're the smartest person in the world. It's like a grandiosity that you have and you don't notice it. You know, everybody else around you notices it, but going through it, you don't notice it. You don't notice your erratic behavior. You don't notice your poor judgment. So, that was kind of the driving force.
But I mean, like as you said, it was very public, and you would post it. You proudly posted on Instagram. It was absolutely entertaining to watch, But it was, and you said you don't realize what was happening at the time. But did you have people around you to tell you that, hey, Patrick, you need to pull back, or you shouldn't push so hard?
Absolutely. I think everybody. I was pretty hard to talk to. I mean, I'm a big guy. My mind was going a million miles an hour. I didn't give a shit, right? Like I was like, okay, they don't know what they're talking about. I would sit and whiteboard all night long, coming up with different business ideas. I thought I was just on top of the world. So, and I grew up, in a time where mental health was taboo. Still is, but it was, I can cut my leg off and I'm not going to go to the doctor, right? So the notion of going, okay, I need to go get help was not in the cards, especially after I just sold my business. Prior to that, I'd made hundreds of millions, selling, monetizing properties. So I thought I was hot shit. And I was like, screw everybody. I didn't really have investors to report to anymore. And,
And when you make it, you're a fairly young guy, and when you make it to that level, and there's not that many people around you who have made hundreds of millions of dollars. So is it hard to take advice from other people? Do you say like you don't understand, you wouldn't know what it is to be in my situation? How did you take advice at that point?
Yeah, I'd say prior to the sale of my business, when I started making real money, I siloed off. I isolated because it felt like everyone in my life was asking me for stuff, or wanted a job or wanted something like that. So I became kind of a homebody and didn't want to hear it anyway. And so, I think my knee-jerk reaction was to go, okay, this person's just telling me this because they're trying to be my friend. Or this person is picking at me. I mean, I went through a divorce and, they were constantly like, this guy's got to get help. He's got to this, that. And I just thought it was these lawyers being lawyers, which they are. But I didn't want to hear it. And I thought, well, shit, I've made all this money. Who are these people? Who is this nobody telling me what to do?
And then you still have a big portion of your portfolio. Explain the portfolio to us. What do you have? What did you have? What did you sell? And what do you still own?
So I still own 20,000 units, with institutional partners. We bought 90,000 units starting in 2010. So my average IRR is 25% over a 3.5-year hold period. So starting in 2010, we started selling in 2013. So, 90,000 units later, we bought $9 billion worth of properties, 172 separate properties, and sold those off.
That happened during the low interest rate period. Is that when you really catapulted?
Yes. We would buy $1 billion a year. And I remember, it was a big deal for me to get joint venture capital in 2010, 2011. I mean, I would raise capital from Carlisle, and then email blast, back then was big deal. Email blasted out, go do a victory lap in New York, be like, yo, I'm making so much money with Carlisle, you really should partner with me. So first it was joint venture capital, and then of course I wanted to raise a discretionary fund. I went up and met with a group called Townsend, and they said, listen, we're not going to give you a discretionary fund. You don't have any realized exits, which Grant Cardone doesn't either. So I really started focusing on monetizing, getting round trips, because I wanted that discretionary fund. So we were selling off a lot. When cap rates got sub 3 cap, really post-COVID, what happened was everybody thought, the Sun Belt was like redneck. I swear, I'd go up to New York prior to that, and they thought I was like, I'd be wearing a Keaton suit, and they thought I was like a redneck in a pickup truck. And so what happened is people moved out of New York, they moved out of the coastal areas in California and moved to where my portfolio was, Texas, Florida, the Carolinas. And so rents went up, cap rates went drastically down, sub 3 cap, that I was selling value add stuff for. And so, I put the throttle down, was screaming at my investors, we have to sell. And it wasn't because I thought things were going to fall off a cliff. I just said, things can't get much better, so why not take profits?
Well, you know, for a multifamily guy, you get a lot of, you know, I talk to other people about you, and folks who are really in the multifamily business, they say you're an amazing operator, and they say that you managed to raise money well, and obviously your timing was great. I mean, when you sold off your management company, it was at the very height, and I think like 2 months later, the whole world fell apart. I mean, did you feel lucky, or was it skill, or was it luck?
I think it was both. I mean, I started talking to investment bankers about the possibility of selling my business, like my platform, probably in like 2018. I mean, I tell people I wanted to put as much distance between myself and broke as possible. So I would meet with these guys and be like, okay, I'm making all this money on carried interest. We've got reoccurring revenue or reoccurring net income. And what can I sell this thing for? And they were like, nothing, you know, like get the hell out of here. And I'm telling you, around 21, 22, it was when private equity shops started buying up platforms, doing platform plays. They wanted to do what I did, become fully integrated. They wanted, frankly, to cut guys like me out.
That's when the private equities were buying single-family homes and buying portfolios for multifamily.
Blackstone had come in and was buying multifamily by the truckload. Private equity was, and they started getting pushback from their investors, like, we're getting double promoted. Why are you raising capital and then turning around to give it to guys like Pat Carroll, who's taking a promote, shipping the money back to you, getting promoted? And so they were looking for ways to cut out guys like me. So they started buying either parts of platforms or entire platforms. There was a company called RMR that ultimately bought my business that I had been told about. They were a publicly traded asset manager, had every asset class, hotels, retail, et cetera, other than multifamily.
Can you move it up to the...
Sorry, my arms are this heavy. Okay, so yeah, and so I think what I've been good at, luck plays a part, but is kind of looking at patterns, starting to see trends. You know, in 2010, it was a trend saying, okay, multifamily has not been institutionalized. It was a mom and pop business. It was grimy. Everybody wanted to own shiny office buildings, shiny hotels. Like the mom and pop, operators of multifamily were lowbrow. I saw that starting to come in and got in front of it. The platform plays was another thing I noticed and got out in front of it. And I interviewed Goldman Sachs, who was another one, Bank of America, and you went with UBS. And we ran a process. We got 30 NDAs signed, which I was shocked. And we picked a high bidder. And they weren't that much behind the next bidder, but they were a public company. They had the money on their balance sheet. But that was early 2022. It took me a year to sell that thing. I mean, every day I was on, and I was afraid my management company was going to flake because they knew I was selling it. By the way, I was starting to show signs of mania, and it was like probably not a great environment to be in. So yeah, it was a nail biter getting that one done.
But if you had missed that window by a year, you probably couldn't have sold it then, right?
Not a year. I mean, like you said, it was like months.
By months, right?
And it was like, holy shit. How the buyer didn't recognize that. They could have come back and retraded me by 50% and I would have had to do it. And what happened is, as you know, interest rates went up fourfold. You know, not like a little bit. They went up substantially. The market grind to a halt. So my whole business model was levered cash flows. I would borrow cheap, buy it, I'd borrow at 2%, buy a 5%, a 5 cap, and get that cash flow. And if the property went up in value, great, but if not, you had that cash flow. You couldn't do that anymore. And then, so that business model died. I would have been feeding a lot of acquisitions. This was before I had AI. I would have been feeding a lot of acquisitions people with nothing for them to do. No one likes laying off employees. It was a private business. I prided myself on never laying anyone off. So it would have been a very difficult situation.
You raised $1 billion a year for about 9 years or 10 years or something, and that's obviously has to come from institutional money. And institutional money is incredibly conservative, and it's very buttoned up. Do you feel that, with what happened in the last couple of years, is it going to be a challenge for you to be able to raise money like that again?
Smart investors invest to make money, and I'm a proven moneymaker. And so I would say, it was never easy for me. I was, in 2010, 2011, I was this kid from Tampa that didn't go to college, that had been arrested before. The good thing is I've never been arrested or in trouble for anything based on integrity. Never anything financially related, never anything that's affected my business. Mine were all self-inflicted wounds. And, I think people are going to look at, okay, this guy's been 25 years in a business, has been a tremendous fiduciary, and he went through a rough period of time, but he got the best help he could. I went to McLean Hospital in Boston, which is a Harvard affiliate. So I kind of did get my Harvard degree. I went there, and I still have those doctors treating me to today, and they don't ever do that. But I think what they saw was a guy that was committed to staying on this path, committed to learning as much as I could about this illness. And so I think institutional investors, frankly, will see that. And I've never been a one-man show. So I'm going to start, in 2026, hiring the best, right? I want Carroll 2.0 to be the Navy SEALs of what it was before. So hiring former Blackstone people that are number 20 on the pecking line, come be number 1 with me, and let them run the day-to-day. I'm the strategy guy. I'm up raising capital. Let them look at them and their Harvard degree, and I think that's something that people will buy into.
I mean, you're in the process of raising money now. What's been the feedback?
I'm not raising money now. I'm under a non-compete until the end of 2026. I'm reputation management, That's why I do a lot on Instagram. Like, if I just sat back and the last thing you ever read about me was the stuff that was in fucking page 6 and the other stuff, nobody would know any different. So I'm on Instagram every day. I'm showing people, I'm changed. And, that's what I plan on doing in 2026, doing more things like this, building out the platform. I mean, I'm going to come out of the gate in 2027, I'm pretty positive, and do 500 to $1 billion worth of acquisitions. So this is the phase where I call waving my ass around,
Your Instagram is not nearly as interesting as it used to be, I have to say. But it is amazing to see the sort of the 180 turn that you did. I mean, you went from one thing to a completely another person. And, I follow you on Instagram, and, you're giving all these educational things, and you're giving all this sort of analysis of the market, which is really interesting. How do you feel like you're do you feel like you're misunderstood? Do you feel like you're misunderstood?
I am misunderstood. I think anybody that's had a lot of success is misunderstood. I mean, you have to be a little crazy to be an entrepreneur. And even when I was building my business in Atlanta, I would never come to these conferences, because one, I got hounded by vendors and things like that, but I liked the kind of mystique of people not knowing. The name of my business was Carroll. I'd have 30 people at these conferences wearing Carroll, and it was kind of badass, right? But I'm sure people were like, I remember going to one of the conferences and walking up and just kind of sitting in a crowd of people and I heard one guy being like, that fucking Pat Carroll is such a prick. And I was like, hey, I'm Pat Carroll, so being misunderstood is a good thing. I think if you're just like everybody else, if you're a cookie cutter, it's boring. It's like my Instagram now. Nobody wants to come work for somebody that's not passionate, that doesn't have a story to tell, that's not willing to get into the trenches. At least I wouldn't.
Are there any charges pending? Is there any court dates or anything, or you're just free and clear from everything that happened?
Everything's been dismissed. I mean, I have a couple of frivolous lawsuits that I'm frankly letting my lawyer deal with, but they're nothing on my radar. I mean, a year ago, there was a significant amount, But yeah, it's all been dismissed. There is literally nothing on my, going back to institutional investors, nothing on my record, you know. The last arrest I really had was getting in a fight in high school, you know.
And you know, part of your strategy has always been to follow the red states, right? Like you always say you follow the red states and that's where you invest. Do you feel like there's still opportunities in the red states? A lot of that Sunbelt stuff took a major hit. Like, where do you find opportunity now?
I was talking to Michael Stern out here.
By the way, he's a big fan of yours.
I'm a big fan of his. He's a self-made guy. And he said, look, I think there's going to be a tremendous opportunity over the next couple of years to buy in New York City, which he's probably right. I mean, so many people are going to go negative on New York, and rightly so probably, with this new mayor. But I learned in COVID, never bet against New York City. And so if you can get in there and have a business plan, you know, it's very hard to make money though with rent control and things like that. But everything's risk-adjusted returns. If something gets discounted down enough, it starts to become attractive. Sunbelt is, look, I'm going to Dallas next week. The Sunbelt market's open businesses, welcome guys like me with open arms. So it's very hard to say they won't continue to grow, job relocations, things like that. But it's not a redneck in a pickup truck game anymore. I mean, they're institutional, and so it's crowded.
So it's interesting for you to hear you say that New York is where you feel like there's going to be opportunity, and that's because I guess the general thinking is like when everybody's running away, you should run into the burning house. That's where the opportunity is.
That's what I like.
Are you looking at deals there? Are you looking at portfolios?
Not while I'm under my non-compete. But I am learning. I mean, that's the great thing about being under non-compete is I sit and study these markets daily. And it's been like watching paint dry. There's nothing to... If you could be the smartest, most well-capitalized real estate guy in the world, and you can't make sense out of multifamily right now. In 2027, however, I think all these loans that people are extending on are going to come due. And that's where the opportunity is. Just saying, I'm going to make money betting on Atlanta or Texas or whatever, that's not where money's made. So I think if you get in and look at interesting kind of specific opportunities in a market like New York, yeah, it could be interesting.
You're obviously a proven operator. Like, what are the sort of the key things you look at when you're looking at a portfolio or market outside of the price? Like, what's the matrix you're looking at?
I mean, I look at submarkets. I want to get really deep on, okay, what kind of school district there is. School districts are hugely important. If it's an exemplary public school, people that can't afford to send their kids to private school will go there and pay higher rents to send their kids to public school. So, in markets like Atlanta, the Sun Belt, you don't have barriers to entry like you do in New York. So anybody can come build right next to you. So you have to kind of manufacture these barriers to entry. I, of course, always look at what's broken and can I fix it and get paid for doing so, So I'm measuring return on equity if I come in and buy something. Of course, every operator thinks they can operate better than the next. So you have to have a little bit of that, I think, mentality. And then just discipline. You have to come in there, and we used to go in there and say, okay, we're going to spend $10,000 a unit upgrading these units. Well, if we got in and rents went up 5 or 6%, I would say don't spend a fucking dollar. Like, we're in this to make money. We're not in to create the prettiest property ever. We're, period. So sit on that equity, return it to shareholders, investors. And I think making disciplined decisions like that, I love Michael Stern. I'm never going to build the tallest building in the world. I want the nitty-gritty apartments that chug out cash flow so I can buy my Keaton suits and like whatever, I'll buy a unit in that building,
I saw that you do tremendous amount of study into the market before you go into it. I saw that when you wanted to get into multifamily, you look back at 10 years of the Lefracks, who are a major landlord in New York City, and you looked at 10 years of their earnings when you wanted to get into it. Do you still do those kinds of deep dives when you get into a market?
Well, I read about the Lafracs, and the dad that made all the money and said, we build for the masses, not the classes. And I thought that was really interesting. I mean, if you look at the world, there's 10% that are in the lowest bracket, and there's 10% in the highest bracket. So I want to be in that 80%. And I also want to be owning apartments where people are not likely to move out and buy a house. That's the worst, right? Keep them for life, keep them happy, things like that. What I did is I read publicly traded companies' 10Ks going back 10 years. So I lived in Atlanta. Post Properties was a REIT, Sunbelt focused REIT. And this was like 2009. I read their 10Ks and I'm like, holy shit, they have 93% occupancy since they were public, right? So like office buildings, you can lose a key tenant and get blown out of the water. Like these things, I realized if I could buy them, I wasn't going to lose my shirt.
There's a lot of asset classes that become trendy. Like data centers are like very trendy right now, or they've been trendy for the last couple of years. Does that excite you? Do you want to get into that or any other asset classes that are outside of multifamily?
I have tried to force myself, because I'm under non-compete for multifamily. I've been trying to force myself to learn and get excited about different asset classes, and I can't. Like office buildings in New York are kind of finally coming back after everybody thought they were dead, right? And I think, though, with AI, how do you own an office building and not think tenants are going to smaller floor plates, right? Like, if you are honest about yourself, like 40% of employment is going away. Anything that sits in front of a computer screen is gone, So if you're a law firm, if you're something like that, you're going to take lower amounts of office space. So I don't like that. Hotels are an operating business. They're not really real estate. They look cool, but like I've never seen anyone that makes money owning hotels. And data centers require hundreds of billions of dollars. And I don't think you can compete with Blackstone on that. I mean, I have a lot of friends, a lot of people hit me up on Instagram. We're going to tie up a bunch of land and go get the power. So I think that's an interesting play, finding these sites and delivering power versus, building a warehouse is nothing, right? Like that's why I never did industrial. Like, what are you going to do? Say I own a bunch of warehouse space up and down I-75 and, $3 a foot worth nothing if you lose your tenant, right? Like, and so, yeah, I'm data centers are going to get overblown just like every asset class. I think it'll be worse because, again, they don't have any value. Office building goes empty, you can convert to residential. Residential goes empty, you can always lower your rents low enough to get it filled up. A data center in Arkansas is not worth shit.
That's the trick with them. I mean, a lot of people don't realize that, with the data centers, is how much electricity can you get per hour to the data center. That's the entire value of the data center. And then can you get the generators that you need to be able to actually process that electricity to it? And that's another challenge to it. But it's interesting to see the amount of money that's going into it. I mean, there seems to be no shortage of money, that's especially from the private equity guys. But so that's not something you're interested in. And there's no asset class other than multifamily that you're fully interested in.
I mean, I am spending a lot of time on AI. I think, just the notion, I started doing it like a year ago because I knew I was going to relaunch my platform. And I was like, God, I really don't want to staff it with 10 or 15 business school kids that are going to spend half their time screwing around with fantasy football and making a lot of human error. You have to babysit those kids. And, when AI started getting brought to my, to my world, I was like, holy shit, this is something that I'm interested in. And if I can train this, I can rip through deals faster. I can pull comps. I can do all these things that would take humans, not very experienced people to do. As I got into it, I got obsessed with it because you really learn that it's the biggest technology change in our life. It's going to be bigger than the internet. And so real estate is always very slow to adapt, but it's one of our biggest asset classes in the world. The investment management business is one of the biggest asset classes in the world. So if you look at the profitability, if you look at the opportunity of being an early mover in that space, that's really what gets me excited.
And you're building your own AI platform, which, by the way, is a red flag for me when I hear like real estate guys in their 40s building their own AI platform. But you seem to be really engaged with it. I mean, I see the stuff that you post. You're building your own LLM to do, analysis of deals for you. Can you explain more about that?
It's not an LLM. LLM is a large language model. It's basically like ChatGPT. It scans the internet. It trains itself on millions of books.
No, but what's yours? What's your platform like?
Mine's a vertical. So if an LLM is a kind of a generic horizontal, I've trained a vertical that's literally, of course, it can scrape public data. Of course, we fed it models and things like that, but it's really how I look at a deal, what you ask. Some market specific. I don't want to rank a deal the same in Atlanta or Miami. I don't want a deal in little Haiti to rank as well as a deal in Wynwood, right? It has to be discounted by submarket. It has to be discounted by age, things like that I look for. The same thing if I was sitting with my analysts, I said, okay, once you do the rudimentary stuff of putting it into Excel, this is what you have to do before you bring this to me, because I don't want to whatever. And you read CoStar, that's old information, right? It's pulling comps from 3 or 4 months ago. I don't want that. Pull real information. Pull current debt quotes without having to call Henry Stimler, okay? Pull these things and get smart. And so this is another thing. And so you build these verticals, right? And it gets more intelligent every time I upload a deal, every time other people are asking me, am I going to sell it? Not to make a lot of money, but I want that data.
But you would enterprise it?
Say that
you
again?
would enterprise the model that you built?
Yeah, I do. I mean, look, it's an internal model. Going back to meeting with institutional investors, I want to differentiate myself. We are AI-driven research, fast movers. Okay, while all my competitors are stuck in the sand trying to come up with, by the way, you show up for a deal, every person has capital. There's 30 of us. We all underwrite to the same damn thing. Why don't we automate that? And so that's what I want to do. Fast mover. Thankfully, I have my own balance sheet. I can take deals down, bring in institutional capital after. And so you ask about operator, getting deals done. The best real estate people have the best access to capital, period. That's the name of the game. So if you can move faster, if you can show capital, how you can move faster, how you can deliver value, how you can get deals nobody else can because you're moving faster, things like that, that's it.
Well, let's pretend that, this is the final thing, but let's pretend that it's 2026, your non-compete is over.
2027.
2027. And these are all your investors. They've all have access to the internet. They've read your old articles. You're going to pitch them. What are you telling them right now?
One, I hope all you do invest with me. I think social media actually is going to be a capital engine for a lot of people, maybe myself. I would say, listen, this is something that I don't shy away from. It was a health issue, and I've got it addressed. It's something I'm, happy to talk about, but I'd much rather talk about where I see opportunities in the market, how I've built A-plus institutional team, how I did $9 billion in acquisitions, how I've never lost money in deals, and how I've been a great fiduciary. I mean, there's not many people I raised $3 billion in equity, and we had to be fiduciaries to the biggest institutions in the world. And I'm very proud of my story. I'm proud from coming from not a lot of money. I'm proud for kind of blazing the trail, I'd say, in Sunbelt multifamily. And I'm excited about starting and doing it even more. I'm 46 years old. I've got a 27-year-old fiance, so I have to find a way to stay out of the house for the next 20 years. And, I'm very excited for it.
Well, Patrick, thank you so much for doing this. I love having this first interview with you. I know there's going to be plenty more coming up. So please, a round of applause for Patrick Carroll.
Thank you.